We're starting off with a story that's been making waves in the financial sector. South Korean tech giant SK Hynix has been facing challenges in the memory chip market, but its rival Samsung Electronics is catching up, particularly in the high-bandwidth memory or HBM market. According to TrendForce, Samsung is likely to match SK Hynix's market share in HBM next year. This development has significant implications for investors who have been betting on SK Hynix's dominance in the memory chip market. While the company is still a major player, its slower ramp-up of HBM4 production has raised concerns about its ability to compete with Samsung. On the other hand, analysts project that contract prices for HBM will rise by multiples as it reaches 30% of DRAM wafer input. This could be a boon for companies like SK Hynix and Samsung, which are well positioned to take advantage of this trend. As we consider the implications of this story, it's essential to remember that the tech industry is constantly evolving. Companies that fail to adapt to changing market conditions can quickly find themselves left behind. So what does this mean for investors? Should you be betting on SK Hynix or Samsung? Or are there other players in the memory chip market that are worth considering? We'll be exploring these questions and more in the coming segments. For now, it's clear that the memory chip market is becoming increasingly competitive, and companies will need to innovate and adapt quickly to stay ahead. As investors, it's crucial to stay informed and adjust our strategies accordingly. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're exploring the latest developments in the global economy, and now it's time to dive into the world of oil demand. According to a report from the International Energy Agency, global oil demand is expected to decline this year for the first time since 2020. This drop is attributed to higher oil prices and supply disruptions caused by the US-Iran conflict. The IEA forecasts a decrease of about 1 million barrels per day by 2026. However, it's interesting to note that despite this global trend, US drivers seem to be bucking the trend. They continue to buy more gas, suggesting that the decline in oil demand might not be as steep in the United States as it is globally. This disparity raises questions about the factors driving oil consumption in different regions and the potential implications for the energy market. To put this into perspective, the COVID-19 pandemic had a significant impact on global oil demand, with widespread lockdowns and travel restrictions leading to a sharp decline in energy consumption. Now, as the world recovers from the pandemic, the ongoing conflict between the US and Iran has introduced new uncertainties into the energy market. It's essential to consider multiple viewpoints when analyzing this situation. On one hand, the decline in global oil demand could lead to lower oil prices, which might have a positive impact on consumers. On the other hand, the continued increase in US gas consumption could contribute to higher emissions and exacerbate environmental concerns. As we navigate these complex issues, it's crucial to remain informed and adapt to changing circumstances. The interplay between global events, economic trends, and consumer behavior will continue to shape the energy landscape. Welcome back to the Riskwiser Zone. We've got a few interesting stories to wrap up the show today. Let's dive right in. First off, Avenue Supermarts, the parent company of D-Mart, reported a net profit of 115 crore rupees for the first quarter of FY27, which is an increase from the same period last year. However, revenue growth was slower than expected due to inflation and changing consumer behavior. In other news, Vijay Kedia, a well-known investor, has acquired a 3.58% stake in Exato Technologies, an IT company that has nearly doubled investor money in the last year. The company provides customer experience, artificial intelligence, and enterprise communication solutions to over 150 clients. We also have an update on the National Stock Exchange's plans to list on the stock market. According to reports, the exchange is expecting a valuation of around 60,000 crore rupees, which would make it one of the largest IPOs in Indian history. Lastly, let's talk about the recent volatility in the markets. With inflation concerns and global economic uncertainty, investors are becoming increasingly cautious. It's essential to keep an eye on your portfolio and adjust your strategy accordingly. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.